I didn't get a chance to record the pre-session, so I'm going to record this whole bit. Happy Father's Day to you guys out there. Hey, let me start off with just doing a quick pitch on the coaching program I rolled out last night for Tim. Tim's been kind enough to help as an assistant coach, and so what I want to highlight first is, let's see. Okay, so here we go. This is just a quick look at the coaching program. Our goal and purpose is individual effort to improve trading performance using small teams, using evidence, with mutually supporting and positive relationships with trusted others in your group who are also engaged in that same collaborative effort. It's a year-long commitment with formal monthly cycles, by which I mean every month there's a formal check-in. There will be tasks to complete each month. I would recommend that folks in the groups of 4 will engage in weekly contact with their accountability partners. The teams of 4 rotate through their accountability partners each month. So over the course of a quarter, you work with 3 different people inside your small group. After that first quarter, the team will decide on how they want to continue partnering. Teams have a password protective private space on Basecamp, which is exclusively your own to work in. Everything inside there is private. I'll give you an assistant coach who's been through a year of coaching with me already. They serve as process facilitators to help you bring out your insights. And they schedule my time for the monthly web conference I'll do with each of the groups. And then they set my agenda and give me requirements to bring to the front. So if that group needs a lecture or a discussion or an example or a clarification, the assistant coach coordinates that with me so that I can be ready during the conference. It's self-directed in the sense that individuals are responsible for their goals, standards, and outcomes. You're guided in the sense that we're operating through a Tortoise approach to coaching, performance improvement, trading, but the decisions, goals, and outcomes are yours. Now, we start off in month 1 with a very structured and detailed set of self-assessments, and those are key towards raising your self-awareness and clarifying your values for your goal-setting exercises. It includes an in-depth look at your brain mode power instrument, which is part of the program fees. Those are $3,000 a year, by the way. Unless you have one of the famous Tortoise coins. So the monthly web conferences last year averaged about 90 to 120 minutes long. It's like we start off scheduling for an hour, but it ended up being 2 hours. And then what we'll do is we'll stay to that time schedule, and I'll have 30 minutes of that session in order to go over any proposed topics that you've asked me to comment on or things I want to share, which will be coordinated through your assistant coach. Participants in those coaching groups are asked to post 1 trade frame a week in the chat room with your favorite trading idea, and to post 1 closed trade case study that's marked up with your key lesson learned. That's going to make the chat room a very high payoff enterprise for folks, because the people who are doing the work of coaching are going to be sharing their insights with us. So I think there's going to be a lot of synergy involved in there. And in order to respect the effort that they're making, I would encourage folks to give them thoughtful comments on the things that they're posting to help them improve their trading practice. I think that would be a good thing. We're also going to be looking for golden nuggets, and that's something I consider to be a personal trading lesson that touched you so deeply that it becomes part of you. And so we're hoping that we can share out some of those because we're all, after all, grappling with the same issues when we look at systems, self, and market. I think we'll be able to start new groups of 4 every quarter, but we'll see how that goes. I anticipate some groups of 4 that will self-organize, like 4 people want to study something, and maybe they want to do some technical training. And so I could see doing almost an online / home study course on any of my workshops where 4 people buy the home study course and then engage in a series of monthly meetings to work through the material and raise questions and put it into practice. If you think about it, that is essentially as much contact time as you would get in a weekend workshop, but in this case it's spread out over the course of a year, and so I think there's an awful lot of goodness that could be developed through that. So the cost of that coaching session, because it would be a workshop and coaching, would include the coaching plus whatever the home study course is. Those are going to generally run about $2,000. If you've got the platinum coin, then that's going to be $1,000, already paying off. We're going to keep an interest list and a waiting list for people who want to do the coaching, if you're interested in the stuff that's on this page. And so if you're interested, I'm going to ask you to send your point of contact info and a short note about what you'd like to work on to Devin Bresser. She's the gal who runs my soccer team for me. I just hired her to help me with business admin. Her email address is devbress, DEVBRESS, &gmail.com. And so that's the coaching that I am going to propose to do. I'm not really looking to do individual coaching. I would consider that to be consulting. That would come at a premium because of the impact on time. Not impossible, but I really want to get this rolled out and start building the synergy inside the community of practice. So that's the main idea behind coaching. We're going to have our first meeting hopefully this weekend, next Friday, with the assistant coaches for the teams that are starting this month. They'll start, well, actually starting 1 July, and then we'll have our organizational meeting and make sure that we're on the same sheet of music as far as roles and purposes and functions of the coach and the assistant, me, the coach, and the assistant coaches, and their relationship with the teams of 4. The intent is that they participate, but they will not be directive. They will simply be accountability partners for the team, and then act as a synthesizer and then a coordinator of my resources. Plus, they'll be able to share the insights that they've gathered through the coaching that they've already done with me. So that's just a quick look, paid political announcement for the coaching program. I'm excited about the opportunity. Now that we're getting this bed and breakfast down here in Kansas City, knock on wood, there's a possibility of having these coaching teams come to Kansas City for their graduation and hang out at the B&B and maybe do some live trading together using Google Fiber. Google Fiber at 1 gigabyte. Whoa. Further on down this page, you'll see some resources that are available to everyone. The standard coaching tasks. If you click on that, that's about 20 different things that we did last year with Kieran and Catherine and a couple others, and it shows how those folks rated each of those tasks that we did. And my intent is to use that kind of as a menu for each group of 4 to chart their own path through the gentle structure of the Tortoise method. A couple other things. This under the coaching resource, there's the Word document for the OWL meditation that I sent out this weekend. I strongly encourage you to give it a try if you haven't done it. I sent some quotes around from people that have tried it already, and they're reporting some really interesting results. It's been really powerful for me, and so I wanted to share that with you, especially on Father's Day, because it's inspired by my dad. I've posted some audio from the live trading workshop in Kansas City. 7 different group drumming sessions that we did. Some of them were with Bill, some were without Bill Scheit. And then just some drum-alongs. I've been hitting the skins here, trying to process all the changes that are going through the community of practice, through the business, through my own life. So I've been hitting the drums quite a bit, and I offer those for you to play along if you feel so inclined. The tidying I place in here because I think there's a really important carryover from the effect of tidying your physical space with its the way it makes you feel about your space and yourself and your life. And so I really would encourage you to take a look at that stuff. The Marie Kondo TED Talk is very interesting. The living example is one where a gal who has a regular YouTube channel decided to follow the procedure through a day in her life and edited it down to 45 minutes, and she shows how she went through her stuff with some pretty dramatic results. There's another time-elapsed one with the tidying with the KonMari method. It's also kind of fun to watch. And then a link to her book at Amazon. So I did that effort with my garage today. It took 4 hours and a team of 4. We pulled about 10 bags of trash out of there, 5 great big garbage bags worth of things to donate, 4 bags of things to sell or donate. If we can't sell them, we'll donate them. And then put up all new shelving, got everything off the ground, very orderly. It looks like a nice auto parts warehouse in there now. It's very clean and orderly. My wife isn't going to recognize the place when she gets home. She'll wonder who possessed her husband. So I offer those insights for you for tidying up and Marie Kondo. Okay, so quick, let's get through the charts. Pardon me, a little scratch in my throat here. I'm not going to be able to spend much time in the chat room this week. I've been summoned up to DC. One of the reasons I'm starting to wind down my Army teaching career, I don't like getting summoned. I've been summoned to go up and give some testimony on educational matters in military colleges. And so I'm going to be in and out during the week. I'll do my best to get in there. I'll certainly be in on the evenings. I will probably just be swing trading. There may be something I can do at lunch with the squeeze method and a trailing stop, so I think we'll give that a try. The old Z3, my new favorite thing. If you have been following our work in the chat room, you know we've been fiddling around with this an improvement on the Z3. Called the Z3PO. It's a combination of the RLCO framework and the Frog, and I think it does a very nice job of integrating it in a very simple but powerful way. And the guys in the chat room are knocking it out of the park, and I think you'll be able to pick up the ideas pretty quickly. The home study course from live trading is where we actually developed it on the spot, and clarified the technique. There's a lot of very good discussions and explanations in there. I would encourage you to think about picking up the pair of workshops once we get the editing finished. There's a lot of great presentations and over 80 trading lessons. So on with the show. Okay. All right, so we're in bullish normal conditions. We're in the middle of the market here on the annual at 57 out of 100, and on the 10-day NDX at 73 out of 100. This percent stretch has us 3.78% above the 200-day moving average, so we're yellow bullish. That got slightly better. The slope of the 50 improved from red to yellow at 4.14. ADX is still a very untrending or neutral 18.4. The risk index, which is the 30-period moving average of the VIX divided by the 10, comes in with a reading of 0.975, which is under 1, so that puts us into risk-off conditions. The risk Z, we take that score of 0.975 and go back 5,000 trading days, find the standard deviation and the average, and that computes the Z score, which is minus 0.37. We plot that on this histogram over the last 90 days, and you can see that we've had a triple bottom that got violated a little bit, but which is held at about the minus 0.5 SD and is now ticking up. This puts us into zone 2, as Tim describes it. It's zone 2, which is a powerful place for swing trades to the long side. So let's be on our guard, especially if we get any kind of favorable news out of Greece and their debt shenanigans. That could give a nice little spike upward in the market. So I'll be on the lookout for that. Um, Blended monthly rebalancing, you can see the holdings right now. Um, we are scheduled to readjust on 1 July. Under the current leaders in the box there, under 621 2015, you can see the current leaders based on the closing prices and performance on Friday. In ETF2, the theoretical exposure remains at 70%. The model portfolio itself is at 90%. And again, we're producing 2 digital workshops from this research weekend last week. I think they're going to be amazing. We really didn't want to leave, I'll tell you. It was quite a lot of fun. And the interesting part to me was to notice how the effect of drumming helped us with our energy levels throughout the day and all during the week. The first day on Monday, we were kind of tired around lunchtime, but we drummed and we were good for the afternoon. By Friday, even though we'd been trading 12 hours a day for 5 days straight, there was more energy than at the start of the week. So the drumming has something to do with releasing tension and adding energy and invigorating your spirit. So I encourage you to give it a try. This next chart is just one I'm toying with. I'm thinking about adding it to the master report all the time. And these are essentially the normalized relative strength of major indexes compared to the U.S. So we subtract out the U.S.'s slope of its 30-period regression line, and this is the residual. So this is the alpha, if you will. And so what you notice right now is the relative weakness in the U.S. of technology and mid caps compared to the S&P. Small caps have had a little bit more pull. The real strength remains in Latin America and emerging markets, which have gone above the zero line. And I am looking favorably here at the Dow, which had this double bottom and is now back up to parity. I actually think that's a favorable condition. So I'll be looking for the Dow large caps to recover, and especially in the healthcare sector, I expect that to. I expect leaders to continue to lead once they get out of their funk. So things like Goldman Sachs and J.P. Morgan should be on our short list. The blended monthly rebalancing portfolios, about half are on buy signals, half are on cash signals. The winners continue to lead. In the ETF 13, that's the Russell has moved to the top of the stack, and I think that's traders front running a bounce in the market. So the large caps have been lagging, and I think now the small cap traders are getting out in front, anticipating some kind of resolution to Greece and Europe, which is going to bode well for the U.S. once that tension is resolved. You see the globals and the commodity-based things are still suffering, and that's true also in ETF 32. In the ETF Max, China continues to dominate all over the place, although this one, the market vectors PEK, was down almost 10% over 1 week, and then the China materials also down big time, and so there's going to be a lot of volatility and maybe some opportunities for buying value there. Looking for all greens, we get the S&P Biotech XBI in position number 9, which is greens across the board and up 5% this past week. Emerging markets index fund in position 21 is in Fuego, as is the small cap healthcare PSCH. I think that's a reasonable place to be right now, and I'm going to put some money into that this coming up week. It's small caps, which have been dominating the U.S., and it's the healthcare, which have been dominating the other spiders. So that one looks to me like a winner. We're going to shift over to the market health check. Let me get my pen ready to draw here. All right, so I've added a couple things to this just for clarity and perspective. This blue box that starts around 213 and comes down to 203, that represents about a 5% sell-off from the highest high so far. And so until it gets past 5%, all of this variation, this volatility, is really going to be noise compared to the institutions. We've had a couple places where people were getting nervous after only a 2.5% pullback. In both of those locations, people were nervous. In both cases, we got a sharp rally, which is really what happens in the channeling system. That happens all the time. So, as Lisa can tell you, that works. I just added the closing price on this little line so we can see where we are within the green, yellow, kind of pink and reddish and solid red. We're not solid red and into the bear until we get below that 200 period moving average. But when we fall out of the river, then I start getting this downward bias. We came close during this past week, but it held. And that responded with a couple nice, very large range days that were great for intraday trading. The slope of the 30 period regression line is this black line. It's sloping down. The slope of the 10 is wickedly up on this little rebound of the last 5 days or so. It still has to get through that 213, which has been sort of a barrier for a while. So we are range bound until we can break through and hold above 213. The jaws of PPO have closed again. We were briefly over bought and pulled back a little bit on Friday. You can see the slope of the 30 period regression line is now below that dotted line. So that's kind of a negative thing. But what I watch for is when that regression line, slope line turns positive. When it starts hooking up, so if this were to hook up here and start to go up, that would be very good. 'Cause the last time we saw that, it returned this kind of a move. So when that slope line turns, think of that as a poor man's RLCO. That's going to be the tell that the next leg of the bull may actually be coming. Okay, so let's move on. In the ETF2 regional report, we're still at 70-30 in the model because 3 of the large indexes are on cash. The global EFA at 40 is still better than S&P. So right now, you can see that EFA has a score of 40, the S&P has a score of 38. So right now, the globals are still favored over the S&P. Inside the U.S., it's small caps, tech, mid caps, and the spiders. Inside the S&P sector spiders, the 2 strongest by far, healthcare and consumer discretionary, although even materials are starting to make a nice move. So right now, inside the U.S., it's that healthcare sector really is dominating. So that's where we want to be. Next up is the world market model, going a little deeper. Inside the U.S., everything is above average, except for the Dow, which is in the yellow. But we saw the alpha report, a double bottom and starting to hook up. So I'm cautiously optimistic about the Dow. Latin American emerging markets have come out of the red and into the yellow. Brazil has actually made a little bit of a move here and is now above average. All of Europe is above average. Japan is still strong. China and Hong Kong, although very volatile, have some momentum going for them. Oil and private equity have had a nice bounce. Treasuries are just getting brutalized. The ETF top 30 looks the same basically as the blended monthly rebalancing version of this. So it's biotech and Russia. Anything with oil in it has been solid. Among the Dow 30, just take a quick look at some performances here. Goldman Sachs, I'm going to continue to stalk that one hard. It's green and white and at the top of the stack, so that's great. Morgan, Disney, and GE, along with Nike, round out the top five. Nike is interesting. It's a green and white status, so that's a good thing. Apple is giving up a little bit of its strength here. It's white and green, so that's a sign of weakness. And also Boeing and Home Depot are yellow and white, so they're weak, but a little further down the stack. DuPont is also weak, even weaker still, with the red and yellow. To me, the story is these top five. The U.S. has been lagging, and so let's just stay with those key leaders. I can't help it. I've been stalking Walmart as a catfish way down at the bottom of the pond there. Moving on. Looking at the daily report, just a handful of signals. There's a couple overreactions. Real estate, gold, and Procter & Gamble are signaled as short in the overreaction system. I would actually wait to see some market weakness if there were serious market news about Greece. Unfortunately, that has a positive effect, I would say, on real estate and gold as alternate investments and a flight to quality. So I would be cautious on those. But there's quite a few in the auto framer that are testing out better than 2-to-1 mechanically. So I think that's where I'm going to be looking this week because of some duty commitments. Very little on the Dow tactical and the ETF tactical, as you can see. There's a ton of good frog quality numbers on both of them, however. So the frog should have our attention. The auto framer, again, has a ton of quality setups. If you're looking for value kinds of plays, we're looking for the top stack here, the ones that are the most number of ATRs below their own 270 regression line. And so that's Walmart, Alcoa, DuPont, Travelers, and 3M. The relative strength leaders are the ones in the red down here. This is how many ATRs above their 270 regression line they are. So you can see Caterpillar and IBM are leading the pack. So it depends on which type of target you want, the lame and the weak that are trying to recover, or the ones that are marching along at the front of the pack. Okay, moving on. This is a new screen that I've added. This we ended up trading a lot off of this at the live trading workshop, and it's becoming a favorite of mine. The first thing that you notice is that we're looking for actually the first one. We want this one, the range divided by the average range. We actually are looking for some setup day compression, and so the filter I put on this was 0.7. So these are all symbols whose daily range on Friday was less than their average by at least 30%. So I consider that to be, a range compression state. So like IWM, for example, at 0.42 only had 42% of its average daily range of the last 30 days. So that's a pretty tight compression. Same with MDY. Same with AT&T. Same with United Health at 53 and Johnson & Johnson at 41. So I'm going to be stalking those. Now the next thing we do is let's take a look at those and see what kind of an intraday pop they might have if it turns out to be an explosive move out of the range. So if we got a mechanical entry, let's say at 5 cents above, there's still room for a 2.7 R. If you're using the range as the risk, so enter a nickel above with a stop a nickel below yesterday's range, there's still a 2.7 to 1 available in Yahoo, for example. That's how you read that. So the range stat is that measure of maximum intraday reasonable move. And so these things that have high range stat divided by risk ratios are ones that can reward the mechanical entries with some very nice moves. So that's how we're using that strategy. This is actually a combination of the RLCO and the frog, because intraday we're using the RLCO patterns to give us insights into improved entries. And then we're using statistics in the frog boxes to help guide our decision making about when to move stops, when to take profits, when to think about re-entering on a reversion trade. And that's everything I wanted to cover tonight. It's been a busy week and it's late, so I need to give you time to prepare your stuff. I am only going to be swing trading the usual suspects. I'm looking at healthcare, those financials at the top of the Dow stack and the Russell. I also have a swing position built in XIV that I'll be managing with Core and Turbo if I can. I'll be looking at the lunchtime compressions when the Z3 Bollinger Bands compress to less than a frog box and stay there for a few minutes. That becomes a very interesting moment. When price begins to expand again, we want to be on that trade in the direction that it's breaking out of the box, out of the pinch box, we call it. So we'll see you in the chat room. You guys take good care, and thank you, Lisa. Keep marching. Hope business is going well. My wife's attending my niece's wedding, so I was thinking about you and the flowers all day today. So you guys all take good care, and we'll see you in the chat room. Keep marching.